All right, now Bitcoin is in a crucial make or break place. What do you think is going to happen when the Fed is cutting rates, right? What do you think happens next? And also, what's the hottest narrative in the world right now that is popping? I'll show you the charts. They're starting to make a move. You may not believe in this, but it is happening. First, let's have a look at Bitcoin. This is what I've been saying all along, right? Over the last 2 weeks, week or so, been calling this inverse shoulder, head shoulder, and saying we break this neckline, right? When I was hesitating here, I said we break this neckline and we're gonna pause here because that's major resistance, and then seek to break through. And see how big this is. How big, look at how many bottoms are here. Look at how many bottoms were here, right? Lots of resistance here, right? Around this low 116 area. So it's popped up 1, 2, 3, 4, wick up, and then down here, right? So basically, what needs to happen here is the market has already priced in the Fed is gonna cut 25 points, right? There's only a 4% chance they're gonna cut 50 points. The market is guessing leading up to the FOMC Fed meeting. What's important, it's not how much they're going to cut, because the market thinks they've figured that out, right? What's important is what the Federal Reserve Chairman, Jerome Powell, will say in his speech. So chances are he cuts 25 points, and then his speech, he might go dovish, which means he might indicate they're going to cut rates a lot more. When he says that, then basically rates just go down over the next 3-4 months, because they're going to cut 25 points or even 50 points every meeting, right? So 3, even 4 more cuts by the end of the year. If that's what he's saying, right, indicating with his language, then yes, I believe Bitcoin should break through and pump up, right? Because Bitcoin's anticipating that right now with a bull flag. This, in my opinion, is a bull flag. Flagpole, bull flag, right? More resistance up to this 119K area. That's what this head shoulder pattern is indicating, right? A pump up to 119K, and then if we can get through there and get it into the 120s, then I think very likely we go for a new all-time high, right? But what about, as a trader, we have to consider both possibilities. What if the Federal Reserve, right? What if Jerome Powell says something negative? What if he says it's a once-off rate cut, and they're just gonna, from here onwards, they're gonna watch and see, take a watch and see approach, see what the data's like next month, and then react to that data. And then, of course, the market is not gonna like it, because the next CPI, inflation data, could be real bad, right? Or PCE. So if that happens, Bitcoin could get rejected here and not make it above 116K and turn down, right? So look, I'll tell you why. Here's a very good reason on why the Federal Reserve should cut rates right now. Have a look at this. This is I'm going to show you guys a Google chart. Here is basically Google Trends, yeah? Google Trends. And if you type in the search term help with mortgage, right, in the United States, how many people are typing that message into Google? It's hit a all-time high since Google has had this metric. It's higher than, this point is at 2009, February 2009. We all remember Feb 2009. That was basically the height of the .com, the height of the GFC, global financial crisis crash, because of all the subprime mortgages, right? And that hit like 99, 100 in Feb 2009. And now where we are, with August 2025, we've hit 100 on this scale. So this is like, people are, according to this chart, according to the search pattern in the United States, people are having mortgages at the rate of 2009 GFC, which is when the worst housing-related financial crash happened, right? And what's going to happen next when the Fed with the Fed rate cut? What's going to happen? What's the hottest narrative in crypto right now? Before we answer that question, first let's answer the question of which crypto exchange does Pablo Jimenez use? Well, Pablo uses this exchange that's non-KYC. That means you don't need to show any ID, right? Trade with Pablo to win. Up to $25,000 US weekly prizes, right? So that means non-KYC, the exchange can't even see who you are. You don't need to hand in your ID. So that means the IRS can't see you, the tax office can't see you, FBI, CIA, nobody can see you, total privacy, right? So all these great competitions, wonderful prizes, but it's only on the Pablo Jimenez link. And if you're watching this video on YouTube right now, then the link is in the description below. The link is in the description below. But if you're watching it on any other platform, such as this one, that's okay. Just click on my profile page and there's my link tree or a stand link, right? And it should be the first deal that pops up because this is a great deal. Okay, there it is. Let's get back to the markets, folks. But remember, this deal is only available on the Pablo Jimenez link, only on the Pablo link. Okay, so just quickly on the on Avantis, AVNT, that's the major DEX that was launched like a few days ago, and I was basically trying to buy it around here. I got in some just below 80 cents, right? I should have reacted earlier, right? I should have reacted earlier. I was getting a little bit too busy, a little bit too lazy. I saw it around 30 cents, didn't get in, right? I only got in around 70 cents. I got like 130 when I made my video 2 days ago. And then I had these buy orders placed below 70 around here. It didn't come back to hit it. So I added some more. I got like 50, 60% of my position here. So I didn't get a full position. I told folks I didn't get a full position. I had more buy orders. And then it came back down here. So here, when it came to about this 91, 92 area, here was my buy order, and you can see this buy order here on basically on the chart. So I'm pretty much all tapped out. The other buy orders were on different accounts. I mean, this is with Bitunix, so I've got like a number of accounts with Bitunix, so I bought it on different accounts. So basically, I see this is on the 2-hour chart. I see like a bottoming tail here, bottoming tail. I tapped into here, and then basically, okay, here, I can't promise that's going to be the bottom, but at least in the short term, I think that's chances are this dip to 91 cent was the bottom, and we bounce from here. Okay, let's get back to the hot narratives in the markets right now. First, I just want to show folks what happens during a rate cut. You know how Pablo keeps on saying, oh, I think we're going to get a blow off top, and then big recession by the end of this year. And markets crash and go into a bear market. And some people don't understand why I say stuff like this, and people are like, it's fear mongering, it's doom, gloom and doom, whatever. I'll show you guys why. So if they cut rates, then why would markets go down? Why would markets go down? So here it is. The blue line is the Federal Reserve rate cuts, right? The green zones are where recession happens, right? Recession. So this is for the last 28 years, since 1997. And the red line is the US 2-year Treasury yield. It usually is a very good indicator because the market ahead of the Federal Reserve is telling the Federal Reserve, you should cut rates now. You should cut rates now. And the Fed, then the blue line reacts after the red line, right? And then the red line bounces up and says, you should raise rates now. You should raise rates now. And then Federal Reserve follows. And then see the red line comes down again, says, you should cut rates now. The market is always going to react faster, and then like up those 13 guys sitting in a room at the Federal Reserve trying to vote on whether to cut rates or not, because the market is literally betting with like a couple of $1 trillion in Treasury bills, and even to a wider extent, a few $1 billion in a few $1 trillion when you count U.S. Treasury bonds and U.S. Treasury notes. So we can see that this is 2000 .com bubble crash, right? Fed cut rates. The market was already screaming, cut rates, you should cut rates now. Fed, see how Fed holds rates, like what they're doing right now, hold rates, and then they cut. They start cutting, right? They wait 1 month, cut, wait 1 month, cut, wait a month, cut, and they cut straight into a recession. Why is that? Because the market was already telling them you need to cut right now, right? This is 1 year on the chart, so this is 3 months of market screaming you should cut right now, and the Fed is playing catch up with these sometimes 50 basis point cuts, and it was too late. US hit recession. Then in 2007, look at this, 2007, or we all remember the movie The Big Short, right, with Christian Bale, who won the Oscar for that, right, about the what guys like Michael Berry did during the GFC crash. This is the green zone, is the GFC crash, 2008 to 2009. US went into massive recession. In fact, they call this the Great Recession. So during this period, market figured out by 2006 that not everything is right with the housing market. Market was saying cut rates, right? Guys like Michael Berry, remember how he went and bought all those mortgage swaps against, I think it was Goldman Sachs, betting the market was going to tank. And the market didn't go down that much, right? The Fed just kept on holding, right? And then the market started screaming, you should cut rates, right? The Fed starts cutting, hold, then cut 25 points, hold, cut 25, hold, cut 25, hold, cut 50, hold, cut 50, hold. And then this was like a 100 basis points cut or something, right? Like 1% in one meeting. So, you can see here was a 50 basis points cut. They were panicking. When the Fed panics, when they realize the market was already ahead of them and the Fed is reacting too late, then basically they're too late. Recession hits, and it was a bad recession in 2009. You guys remember this. US property prices went down like 90%. So here it's pointing out like this is where the Fed funds rate is. The red part is where the market is telling them. The market was like something like 150 to 200 points lower, telling the Federal Reserve you should cut. So here was once again before COVID. Before COVID, the red line, the market's screaming, saying you should cut now. You should cut rates now. You should cut rates now. And the Fed again holds, and then starts cutting, and then boom, recession happens. People might say, oh, that's because it's caused by COVID. But you could also say that that COVID only tipped what was already happening over the edge, right? The recession was already coming because the market was already telling you to cut rates. So now, have a look at this. This is a situation we're in right now, and what does this remind you of? Have a look. So basically, right now, the situation just looks a lot like 2009 to me, because see, in 2009, the market was like going lower, 50 basis points lower than the Fed, saying you should cut now. Hasn't dropped like crazy just yet. Right now, it basically went sideways like this, went down like this. Fed finally responded and cut, and then went sideways again, and then basically here once again is the difference between the Fed funds rate at 4.33% roughly, and the market is pricing at 3.62%, so 70 points lower or so. That's the Fed would need about 3 rate cuts, 3 25-point rate cuts just to catch up. So basically, like imagine, like I showed you guys this chart before. Imagine if we just drop. Imagine if we actually drop below this key support level, because Fed funds, US 2-year Treasury yield, that's a red line, has been bouncing off here for like actually a number of months now. This has been happening for over 12 months now. Imagine if we break this and go down like this. Then the Fed is going to have to do this. We're going to have another typical situation. We've seen this play before over and over again, where the red line just crashes down, right? Remember this how similar this looks to this situation? and red line crashes down, and blue line, which is the Fed funds rate, the Federal Reserve cutting, but at every monthly meeting, they're going to cut, little step pattern down. And by the time they cut it down, boom, we're going to see another big green patch here, major recession. That's what very likely could play out. That's why I've been calling for a blow off top. What I mean by that is when the Fed first starts to cut rates again, the market is going to cheer and say, wow, the Fed is cutting rates now, blow off so much liquidity coming into the market. We get that pop up, blow off top, right? SP 500, as I've been saying, the Spider ETF goes to 670 to a 700 area. It's at 660 now, so we're not too far away. And then basically market realizes like here, the Fed is cutting rates because recession is coming. And in fact, the Fed is once again too late. The red line is calling it better. The market is calling it better than the Fed. And then boom, recession. And when recession comes, all the big whales, all the big institutions start dumping their stocks. They probably start dumping right now, ahead of time, and bear market in stocks. And when that happens, what do you think happens to crypto? Right? As I keep on saying, the only thing that might survive is gold. But remember, gold went down 9% during this COVID crash. But that was an extreme COVID crash because everyone was short of liquidity. It was a black swan event. If it was sort of like the 2009 type of crash, maybe gold even goes up. I haven't checked, but sometimes gold go up during these sort of rate cuts. So, okay, now let's have a look at which sectors in crypto that I think is the next one to pop. Where should we be looking? Here is a clue. This is the weekly revenue of something called the Ronin chain. Weekly revenue from the Ronin chain. And this was 2021 bull run, right? And now, late last year, they've topped their 2021 transaction fees. So Ronin chain's doing really well. And then boom, now we've gone parabolic here. And once again, I'm not sponsored. But if Ronin Chain's watching this video, want to sponsor me, yeah, get in contact. I'd be happy to take your dosh, right? So what does this mean? Ronin Chain is actually a gaming chain. If there's so much money flowing, it's a small gaming chain. If there's so much money flowing in, I think it's only 500 mil in market cap. If so much money is flowing into a gaming chain, does that mean gaming is heating up again? Okay, so what other evidence are we seeing that gaming is making a comeback? So how about this? Like today, right? Bitcoin is up, but ETH is down, right? And most coins are following Bitcoin to be up like 1%, 2%, whatever, 1%, 2%, 3%, one of them. And here is something that's up 6%. It was up a lot more before. It was up like 12% before, like pulled back from 75 cents. So this was IMX. Immutable X, two Aussie founders created this, and they have a lot of, this is probably, I would call it the second largest gaming chain in the world right now. The largest being Sui, SUI, which is also kind of doing well. So the number 2 gaming chain in the world, they have a lot of deals being signed or are coming with large gaming companies. Sui, they were rising before and then this pullback. So IMX moving, right, having a big pop, and Ronin chain having a big pop. So I think gaming is making a comeback. So I'll have a closer look, see what gaming coins are going to pop next. So follow Pablo for more updates. Catch you next episode.